Hello, this is Steve Malone with CompassFX. I hope you're doing well today and you're getting some good trades. In a previous video, I'd mentioned to look for the Reserve Bank of Australia's meeting minutes and the potential for those meeting minutes to be upbeat, which would cause the Aussie dollar to potentially rise. Well, the meeting minutes came out, comments were a bit lackluster, and so what we saw is a potential breakout of this consolidation phase, this wedge pattern. The market moved up a bit, about 20-25 pips, but after the meeting minutes came out, it kind of meandered a bit and then started to drop. And then later today, we saw in the U.S. session a strong drop back down to a previous level that I had mentioned. And that level was somewhere right around that 93.35 area. And I had mentioned in the previous video that if you go from that swing low to the swing high, we could see a pullback right to about that 618 level. And from this standpoint, we'll have to look to see what the market does. Now, in today's video, I really want to focus my attention on some questions related to dots. I've had some folks ask me, how do you work with the dots levels from session to session? Because the dots levels seem to change from session to session. And why is that? Well, it has to do with the fact that the market expands and contracts. As you can see here, the market expanded to the upside or trended to the upside, and then it trended to the downside and then got really tight right in this area. And when the market contracts, then you're going to see price action and price levels contract as well. Let me show you what I'm talking about here. When you go take a look at the dots based on the Australian session, move it over just a bit so you can see where we opened up at. Now I want to make note, this level right here, the white line, represents the open of the day. And it's so important that you stay constantly aware of the open of the day, because the market has a tendency to want to work back towards that open of the day. So in this case, the open of the day is sitting here around 94.22. But let's take a look at what happened with the dots Guppy model. You can see that the Guppy moving averages, the longer term, were moving to the upside, then they rolled over. And typically that happens when we go from one trend direction into the opposite trend direction. You're going to see the Guppy moving averages roll to the downside. So they rolled over here, but notice what happened when it came to the dots levels. Here we have the sell entry, the sell target number 1, and sell target number 2. They're already laid out for you at the start of the Australian session. And look what the market did. Market did break down, did not hit the sell stop loss level up here, rolled down and hit sell target 1, rolled down and hit sell target number 2. And then as the market continued for the day, it eventually pushed lower. And I do have folks asking me, how do you work the market when it breaks down lower? We'll get to that in a moment. Now let's take a look at the European session. And something I want to point out to you in the European session, you'll notice that the levels got tighter here. You can see that the sell stop loss level is 93.94 during the European session. But during the Australian session, that sell stop loss level was 94.25. Why? Because from one session to the next, you can see that the market tightened down right in here. And when the market tightened down, it's going to adjust the algorithm levels. So the market kind of gave a potential entry right here, and the market bounced up. Now I would be actually looking for a bit more of an actual push and a close up under and a retest of this, but had you entered there, you would have eventually been stopped out because it came right to the level. Now that's where the important thing is of realizing where the open of the day is. Had you left your sell stop loss a bit higher, closer to the open of the day, which was around that 94.22 area, you would not have been stopped out. Had it a bit higher where we started the day, back up in this area, you wouldn't have been stopped out. So just be aware of that. Then the market moved down, and again, the market gave us the opportunity to note the levels, and look what the market did. The market came right down during the European session as the market was breaking lower, and we hit the sell target number 2, and it continued pushing on down. Now to reach this potential level down below here, you could have actually taken the distance from the sell entry to the sell target number 2, which is about 19 pips right there, and just measured what's 19 pips down and stacked it. So that's around 93.42 area. You could have had a potential second target at around that 93.42 by simply doubling it up. Now let's go take a look at the US session. And we see at the U.S. session is really when the market kicked off today. That was when we got that push down. It was a beautiful setup. For those of you who have the dots, guppy method, you can note that we got a little tight here during the European session, and this was a beautiful setup here. The market made a pretty good move down. The long-term guppies held in and showing direction. Then we got a sudden shift in the market. The short-term guppies were up underneath anyway. So the market kind of came back, tested here, and then a nice move down, and again, hitting levels. And again, like as I mentioned, you could simply have looked for doubling up the distance here and put a level down here right around that 93.38. See how that lined up? So we had a 20 pip move from the sell entry to the sell target, and then your next potential target would have been either the ADR level or look to see it push all the way down that additional distance, and that's exactly what the market did today. Now, we don't have these type of moves every day, but what I want you to note is how the levels are moving based upon market movement. This is a price-based indicator. So you'll note when we go back to the Australian session that the sell entry level was 94.10. In the European session, it went to 93.81. And looking at the U.S. session, you can see it went to 93.78. The dots indicator is dynamic based upon current price movement in the marketplace. And again, what the dots simply is an algorithm that compares current price market conditions with historical price movement to determine the levels and the probability as to where the market's going to go. So that took place today, had a very nice move. If there's more questions like this, by all means, send it to support@compassfx.com. Now again, for those of you all who are not that familiar with the dots method indicator, check it out. Go to www.compassfx.com and learn why hundreds of traders are using the dots method indicator. Well, this is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.